Empezamos, Rosario. Hello, good afternoon, everyone. Great pleasure to welcome you all to the 16th edition of the Latin America Policy Dialogues webinar series of the Economics Department of the OECD. The idea of this seminar series is to bring together policymakers, experts from across the region to exchange experiences, analysis, discuss policy options, and explore practical solutions to the challenges we are all facing in Latin America. As we all know, central banks, which is the topic of the conversation today in Latin America, but also more broadly, have been instrumental in ensuring macroeconomic stability, often under rather challenging conditions. In recent years, they have also had to cope with growing expectations of societies about how policymaking is conducted in our countries, to address rising inflation in many parts of the world, to respond to new aspirations, and to do all that while maintaining their independence and public trust to conduct effective monetary policy. Central bank independence has long been a foundation of effective monetary policy making. Today's discussion highlights the importance of strong and independent institutions to promote economic resilience in general. It also comes at a very opportune time as the central banks of Mexico and Chile celebrate their 100-year anniversaries, a fitting moment to reflect on a century of governance and the road ahead as central banks face new challenges. Today's conversation brings together senior voices from across the region to discuss how central banks can reinforce their independence, navigate political economy challenges, and prepare for evolving demands for the future. We are very honored to start the conversation with a keynote intervention by Alexandre Tombini, Chief Representative for the Americas at the BIS. He's held this position since September 2019, and Alexandre has held very senior positions in the Brazilian administration, including as governor of the Central Bank of Brazil. Alexandre, it's a great pleasure to welcome you. You are going to talk to us about lessons from 2 decades in the Americas and share insights from recent work by the BIS. Floor is yours. Great to have you with us.
Thank you so much, Luis. Great to see you after so many years. I mean, we have been together in many other initiatives in the past in the areas of macroeconomic and monetary policy, I should say. So it's a great pleasure to be here with you and so many friends here in this panel. So through you, let me thank the Organization for Economic Cooperation and Development, the OECD, for bringing us together to discuss precisely central bank independence in a world that continues to evolve. This is a topic at the heart of how we navigate the complexities of ensuring stability and fostering trust in our institutions. As the title of this panel suggests, our focus today is on central bank independence and the changing global environment. To frame my contribution, I will first reflect on central bank independence. I will then turn to the transformation that are redefining the challenges that central banks face. And finally, I will marry the two together to explore what this changing world means for central bank as they endeavor to fulfill their mandates within a framework which is based in their independence. So turning to central bank independence, I think the importance of central bank independence has been highlighted by the experience of the countries in Latin America. The painful episodes of the debt crisis and high levels of inflation of the 80s and the 90s, I think, forced governments to confront the urgent need for a comprehensive wave of measures to construct the foundations of a strong macroeconomic framework. At the core of these efforts was the recognition that achieving low and stable inflation was critical, not only because price stability is a valuable objective in its own right, but also as a foundation for sustained economic growth and improved social well-being. Granting independence to central banks became a central pillar of these efforts, but it was not the only reform that we've seen in the 90s and early 2000s. Rather than isolated initiatives, central bank independence was part of a concerted effort to build a sound macroeconomic framework. Countries in the region also adopted flexible exchange rate regimes, which enabled the independent conduct of monetary policy while serving as a vital shock absorbers against external volatility. At the same time, economies were open to international trade and capital flows, and a stronger prudential regulation and supervision were deployed to fortify their financial systems. Fiscal consolidation was equally critical as governments work to avoid fiscal dominance and ensure that monetary policy could focus squarely on achieving sustainable reductions in inflation. At the time, there was a pressing need for an institution that could command public trust in its ability to maintain low and stable inflation. Policymakers responded by turning to the concept of an autonomous and independent central bank, an institution designed to inspire trust. With a clear and well-defined mandate, an independent central bank will act in a predictable and consistent manner to achieve its predefined goal of price stability. Confidence and policy effectiveness were further strengthened by accountability, which by its way fosters transparency. Together, these three institutional pillars, clear price stability mandate, independence, and accountability, form the foundation that enables central banks to maintain price stability. This threefold was reinforced in an earlier speech by Pablo Hernandez de Cosa, our general manager, in 2025, the 100th anniversary of Banco de Mexico in August. While central bank independence is designed to shield monetary policy from undue influence, it does not imply isolation. On the contrary, effective collaboration with other government entities is often necessary to ensure that complementary policies work together to reinforce macroeconomic stability. Inflation targeting has proven to be an effective framework for operationalizing the core principles of central bank independence, which is maintaining price stability. It provides a practical way to implement the key pillars that underpin autonomy. Inflation targeting places accountability and transparency at the center of policymaking. A numerical inflation target enhances then the accountability and transparency by translating the central bank's mandate into a measurable and concrete objective that society can check. Central banks operating under this framework must clearly communicate their objectives, the rationale behind their actions, and the factors they consider to be influencing inflation. In doing so, they not only fulfill their responsibilities to explain their decisions, but also reinforce the trust and credibility that are vital to maintaining their independence. This framework also emphasized the importance of policy tools, with the policy rate or the reference interest rate serving as the primary instrument to achieve the inflation target. Under inflation targeting, monetary policy decisions are guided solely by the pursuit of price stability, while the autonomy of central banks seeks that it is not influenced by the broader considerations of other entities within the national institutional framework. The inflation targeting framework has proven effective through various challenges, notably the COVID-19 pandemic, which brought decades-high inflation to the fore. So let me turn now to the changing world. The world has significantly changed since central banks were granted autonomy. Central banks had to adapt, demonstrating their ability to respond with flexibility and innovation. An important turning point in this changing world was the great financial crisis of the 2008-2009. The crisis exposed significant vulnerabilities in the global financial system and underscored the vital role of financial stability. It became evident that central banks needed to adopt a more proactive and vigilant approach to financial stability in order to navigate a world that had become far more complex and interconnected than previously envisaged. The COVID-19 pandemic marked another phase of challenges for central banks, initially underscoring their role also as a market makers of last resort in stabilizing financial markets. Subsequently, central banks acted decisively to face the supply-demand imbalances driving inflationary pressures. The onset of the war in Ukraine, in the center of Europe, further complicate matters as its concurrent development with the pandemic highlighted the significant impact of supply-side shocks on inflation. While advanced economies were reminded of the severity of such challenges, emerging market economies, more accustomed to navigate them, may have drawn on their experiences to raise policy rates earlier than their peers. Turning to the financial system, it has become increasingly intricate with new layers of complexity emerging in recent years. The prolonged period of low global interest rates after the GFC, the expanding role of non-bank financial intermediaries, and the rapid rise of digital financial technologies have introduced vulnerabilities, new challenges for shock transmission, and a greater need for regulation and cybersecurity. All these developments have made the task of central banking more complex and uncertain. Many of the risks we face today are hard to predict, quantify, and address. They often involve very basic uncertainties, the so-called unknown unknowns. For example, geopolitical shocks can lead to sudden capital outflows, sharp exchange rate fluctuations, and liquidity stress in financial systems, even in core financial markets. While these evolving challenges demand attention, two long-lasting issues, old acquaintances with renewed urgency, deserve particular focus. The first is the need for higher productivity growth in order to achieve stronger long-term economic growth, which is critical for improving living standards. The second is the challenges posed by higher levels of public debt, a point highlighted by Pablo Hernandez de Cos in his recent speech in August 2025. So let's put these two things together, central bank independence and the changing world that we live in. So what would this mean for central banks, their independence and their ability to fulfill their mandates? They suggest that we will probably be living in a more shock-prone world. In this environment, the conduct of monetary policy becomes more complex in at least three dimensions. The first, the described change could imply a structurally subdued demand that has to be distinguished from cyclical slowdown. So separating what is structural and what is cyclical becomes even more complex under this environment. Second, central banks will need to manage the trade-offs posed by supply-side shocks, which create upward pressures on prices while simultaneously constraining economic activity. While monetary policy, as we all know, cannot directly counteract the root cause of these kind of shocks, it has a critical role to play in ensuring that inflation expectations remain firmly anchored. Achieving this will require central banks to communicate their policy decisions with clarity and transparency, whether they choose to look through temporary shocks or act decisively to prevent inflationary pressures from becoming entrenched in inflation expectations. Third, the relationship between monetary policy and financial stability will likely face greater tensions in this more volatile world. The interplay between these two objectives can become particularly challenging during periods of economic and financial stress. Central banks have the responsibility to fulfill their mandates, even in the face of uncertainty and complexity. Transparency and accountability require that any actions taken are clearly explained to the public. At the same time, this steadfast commitment to price stability, along with transparent communication and accountability, allows central banks to justify and safeguard their independence. Ultimately, it's in their hands to uphold these principles. Beyond the immediate difficulties posed for a more shock-prone and uncertain world, the deeper long-term issues of low productivity growth and higher public debt may present the most significant challenges to central bank independence. Persistently low productivity growth, as we know, constrains long-term economic expansion, which in turn heightens the risk of inflationary pressures. It may also give rise to calls for central banks to take a more proactive role in stimulating the economy. At the same time, high levels of public debt further complicate the policy landscape. In a scenario of low growth and mounting debt, concerns about fiscal sustainability can intensify, and central banks may face increasing pressure to keep interest rates low to ease debt servicing costs. All these pressures run counter to the autonomy of central banks and their focus on their primary mandates, and will prove, as we know, unsuccessful and counterproductive in the medium to and long term. So having discussed the challenge of central banks are facing, we turn to where we started. Central bank independence cannot be viewed in isolation. It must be understood within a broader context of the macroeconomic framework. If low growth and fiscal pressures threaten central bank independence, a cornerstone, as we know, of low and stable inflation, then efforts by the competent authorities must be redirected towards fostering higher productivity growth and strengthening sustainable public finances. To conclude, let me reiterate that independent central banks emerge not in isolation, but as part of efforts to build a stronger macroeconomic foundation that could foster an environment of low and stable inflation. As we face a future characterized by heightened uncertainty and more frequent shocks, central banks must remain unwavering in their commitment to fulfill their mandates. At the same time, they must continue to reinforce their accountability and transparency frameworks, ensuring that their actions are clearly communicated and understood by the public. In a world increasingly prone to shocks, the ability to explain decisions, the rationality behind them will be critical, though effective communication, central banks can reinforce the legitimacy, build trust, and underscore the value of their independence. So I think those are my initial remarks, Luis, and I'll be happy to engage in a discussion with the panel later on. Thank you very much.
Many thanks, Alexandre. You really presented a very rich set of reflections on the implications from what can be described as a very challenging constellation of new elements the changing nature of risks and uncertainty that you mentioned, the state of the public finances, but also the longer-term undercurrents, such as low productivity growth, that are shaping the way our economies work, how the transmission mechanisms operate when you think of monetary impulses, and also new challenges that our economies will be facing, dealing with climate change being one, the digital transformation and other aspects of it. So no shortage of challenges, I'm afraid, for central bankers and policymakers in general for the years ahead. But with that, there is a lot of food for thought in what you presented. I'm curious about what Gabriel, Bibiana, Claudio how they will react to some of these thoughts and present their experiences, so that we can all come out of the discussion a little wiser about how to go about these challenges in the future. With that, Gabriel, could I start with you? Let me introduce you, Gabriel Cuadra, board member of the Central Bank of Mexico, with a long career and experience in policymaking in the Mexican context. One question I had in mind for you, Gabriel, is obviously the Bank of Mexico is one of the most institutionalized, reputed institutions in the continent. You've navigated the pressures in recent years while being able to maintain your credibility. How can internal governance, communication strategies, board composition, and all these features of central banking, how has all that helped safeguard independence over time, based on your experience at the Bank of Mexico?
Well, good morning. Can you hear me?
Yes, please go ahead.
Well, good morning in Mexico and in Latin America. Good afternoon in Europe. So thank you for the I'm sorry. I'm to share a presentation that I prepared for this seminar. Let me.
We can see if.
Okay. Perfect. Yeah. Well, thank you for the invitation to this webinar. I think the topic of the webinar is very relevant, the autonomy of central banks, and I think it's also a timely topic. Banxico has been an independent institution since 1994. So last year it was the 30th anniversary of the central bank autonomy, and as Luis mentioned at the beginning of the webinar, this year is the centennial of Banco de Mexico. It's also the centennial of the Central Bank of Chile. 2 years ago, it was the centennial of the Banco de la República. So in this presentation that I prepared for this webinar, first, I'm going to briefly discuss the history of Banxico autonomy, and then I will address some topics, questions related to the autonomy of central banks. So going to the first slide. Well, I would mention that Banco de Mexico was founded in 1925, and at that time the Mexican law didn't state that the Banco de Mexico was an independent institution. Nevertheless, there were some limits or ceilings to some key variables, like the central bank credit to the federal government. This credit couldn't be above 10% of the central bank capital. However, in the late 30s and in the 40s, the Mexican Congress changed the Banco de Mexico law. Those limits were removed, and accordingly, Banco de Mexico was exposed to fiscal dominance. So the risk of fiscal dominance increased in the case of Mexico. However, during the 50s and 60s, we had a fiscal and monetary discipline in Mexico. So we had an environment of low and stable inflation. We had price stability for 2 decades without central bank autonomy. So at that time, in many Latin American countries, there were high inflation, but not in the case of Mexico. So until the 60s, we had fiscal discipline in the case of Mexico. The fiscal deficit as a fraction of GDP was very small in the case of Mexico. But then in the 70s, the federal government started to implement expansionary fiscal policies. And in this context, the fiscal deficit was financed through money expansion and external debt. At the beginning, there was an increase in economic activity, but inflation also started to increase, given the fixed exchange rate and an inflation in Mexico higher than in the US. There was also a real exchange rate appreciation. And this, along with the higher public spending, led to an increase in current account deficit. There was a decrease in international reserves. There were concerns about the sustainability of external accounts. So in this environment, there was a further decrease in international reserves. And at some point, the system was unsustainable and it collapsed. So we had a financial crisis. We had a balance of payment crisis. So in this context, I would argue that during the 70s and the 80s, in many Latin American countries, there were periods of fiscal dominance and high inflation. In some countries, they even suffer hyperinflation periods, but this was very, very costly for the population, and we had to do something about that. So in this context, the legal framework for central banks was modified. In the case of Mexico, in 1993, the Congress reformed the Constitution, and I will emphasize 2 main changes. For instance, a price stability mandate for the central bank, and second, the central bank autonomy, the autonomy of Banco de Mexico. And well, as we can see in this graph, over the last 2-3 decades, there has been an environment of low and stable inflation in the case of Mexico, during the period in which the central bank has been independent. The inflation rate has been lower than in the previous period. And we can say the same for other Latin American countries. And I would argue that there have been positive results. Price stability has had some benefits. For instance, in the case of the financial systems, an environment of low and stable inflation has allowed the development of long-term financial instruments. In addition, there has been a decrease in nominal and real interest rates. So price stability has been positive for the development of the financial system. In addition, regarding inflation expectations, I would argue that inflation expectation, medium and long-term inflation expectations, have been stable, have been anchored. I will mention that during the recent inflationary period related to the pandemic shocks, we suffer an important increase in inflation, but medium and long-term inflation expectations remain stable, which reflects the credibility of the central bank commitment to the price stability mandate. Now, I have talked about inflation, about the financial system, about inflation expectations, but what about economic activity? During the 2-3 decades, the annual GDP expansion rate in the case of Mexico has been low. For instance, if we consider the period between 2000 and 2019, just before the pandemic, the average GDP expansion rate was slightly below 2%. It was around 1.8%, very low. So we have had price stability, but the evolution of economic activity has been weak. So in this setting, I will formulate some questions that I think that we as central bankers must have a good answer for this question. The first one is the following. Is central bank autonomy essential for price stability? And the second one is, does central bank autonomy, together with price stability, ensure strong and sustained economic activity? Well, regarding the first question, as I mentioned, during the 50s and 60s, in the case of Mexico, we had price stability, we had fiscal discipline without central bank autonomy. Now, for instance, Eduardo Turrent mentioned that in this period, there was something that he called the charismatic autonomy. So according to him, at that time, fiscal and monetary authorities were convinced about the importance of macroeconomic stability. And he also argued that the finance minister and the central bank director had some influence on political authorities. They were able to convince political authorities about the benefits of having fiscal discipline, fiscal and monetary discipline. Accordingly, we have at that time an environment of low and stable inflation. But as I also mentioned, in the 70s, with a new government and different officials in the Ministry of Finance, the federal government started to implement expansionary policies, fiscal expansionary policies. So I would argue that formal or institutional autonomy is important, but because we don't know what will happen in the future. We don't know who will be in office in the future. So in that sense, I think it's important to maintain formal autonomy. So in principle, it would be possible to have price stability without central bank autonomy, but I think that institutional autonomy is important in order to maintain that, that autonomy in law. Now, regarding the second question, as I mentioned, during the last 2-3 decades, economic activity has been weak in the case of Mexico. So in the period in which the central bank has been independent and we have had price stability, the performance of the Mexican economy, the evolution of economic activity has been low. So the question is that is possible to have a strong or dynamic economic activity with an autonomous central bank and price stability? Well, given the distortions of inflation, clearly price stability is a necessary condition for having a dynamic economy, but it's not a sufficient condition. In my opinion, there are other factors, real and structural factors, affecting the performance of the economy. In that sense, I would emphasize the evolution of productivity. In the case of Mexico, total factor productivity and labor productivity has been stagnant or even contracting in the last 2-3 decades. So the low economic expansion rates in Mexico over the last decades, in my opinion, has been related to the evolution, to the weak evolution of productivity. And finally, I will emphasize, or I will argue that, of course, we need public policies to increase productivity, but productivity, in my opinion, is not only important for economic activity, but it is also important for inflation. And I will emphasize 2 main channels. For instance, if productivity were dynamic, In that sense, I think that companies would be able to deal with supply shocks, with cost pressures, without increasing the prices. And there's another channel. An increase in productivity will tend to increase potential output. With a higher potential output, I think that economies would be able to achieve higher expansionary rates, a higher levels of economic growth without any pressure, without any demand pressures. So in that sense, I think that the answer to the question is that the price stability is enough to have a dynamic economy. The answer is no. We need more than price stability. But price stability is very important. It's a necessary condition. So I think that I will stop here, and later we will continue talking some important topics related to the central bank autonomy. Thank you.
Thank you very much, Gabriel. Thanks also for noting again the importance of sound public finances as also a precondition for macroeconomic stability in general, going back to a point that Alexandre made in his presentation, and also how important it is to act on the supply side of the economy through the appropriate policies for that, so that our economic performance can strengthen at the same time. Viviana, if I could turn to you. Viviana, you are a board member of the Central Bank of Colombia. You've held this position since 2021. Prior to that, you've held several senior positions in the Colombian administration. Very interesting to hear from you now from the perspective of the central bank. Your thoughts on these challenges we are facing, Viviana. Colombia's central bank has maintained a very strong reputation for policy consistency, for professionalism, an institution that is known for that. But how can central bank independence be safeguarded in an environment where fiscal pressures are strong, that fiscal institutions have often changed, and that political demands are often very strong on how macroeconomic policies are conducted? What are your thoughts?
Well, so good morning and good afternoon to everyone. Thank you, Luis, for the kind introduction. And let me also thank the OECD team, Claudia, Aida, for the invitation to participate in this webinar. I'm very glad to be here. So let me first give you a little bit of context on what has happened in Colombia in the past years to better understand how, in our specific case, fiscal and monetary policy have interacted after the pandemic. So basically what we had in Colombia is that during the pandemic, as basically every other country around the world, the government ran a large budget deficit in order to assist the population during the pandemic. After that, we had an important correction of that deficit, a reduction of that deficit, perhaps not as sharp as many of us would have wanted it to be, but it was a movement in the correct direction. However, what happened last year and this year is that that deficit widened again. And it has widened considerably. According to some analysts, that deficit could reach levels that are comparable to those that we had during the pandemic. So yes, we're having a very strongly expansionary fiscal policy. And that, of course, is having impacts that I would talk about. Under these circumstances, the central bank, the monetary policy, has adjusted as other central banks in the region and in the world to assure that inflation converges back to target. Inflation has actually fallen considerably, but it hasn't yet reached the target. So 4 or 5 years later, we still haven't been able to converge to target. And part of the reason for that has to do with the topics you mentioned, Luis, which are a strong fiscal imbalance and I would say strong fiscal uncertainties as well. And how have these situation affected the macro balance in Colombia? Well, on the first place, there has been a very strong boost of internal demand, yeah, especially driven by private consumption. So private consumption in Colombia reached after the pandemic historical heights and has basically remained there and recently started to grow again. So private demand has been very, very strong. Of course, that has been very inflationary. But then also, we have had an increase in the risk level of the country, which at some point has led to depreciation of the currency. And according to the estimations of the technical staff, we have a higher level of the neutral rate in Colombia. So all of this has demanded higher cuts, and even those very higher rates, excuse me, and even those very high rates have been unable to really make inflation converge completely back to target. Um, but I would say that in addition to this macro that we all know and understand well, there is also the politics. And the politics are also complicated because, yes, central banks, we've always, I mean, we're sort of used to the criticism, to the questioning, but recently the public debate has turned much more radical, much more polarized, and all of that implies a reputational risk for the central bank and can lead to credibility losses for the central bank. And I think, again, this happens here in Colombia, but it also happens in other countries of the region, in other countries of the OECD, and even in many advanced economies, we're seeing that too. So uh, I think the Colombian example shows very well how this unsustainability of the fiscal accounts or deterioration of fiscal accounts, the political debate has affected the monetary policy and the effectiveness of monetary policy, which I think is the first step to try to think how to uh, act under these difficulties, under these challenging circumstances. And first, I would say perhaps the obvious, but I think that we cannot take for granted that we will continue always to have the legal rules that independence demands. Uh, we have them in Colombia, we have them very well structured, actually constitutional arrangements that have served the country very well. But I do think that we have to assure that that continues to be the case, that we sort of protect those rules. And yeah, to assure that we have the adequate mandates, that we have the adequate mechanisms for appointment of governor, board members, technical staff, that we continue to have financial autonomy, which I would say demands a bit more of attention recently, given changes in central bank balance sheets. Um, and so that I think is something important to think about, and it leads me to a second point, which is uh, we have to continue to improve our accountability to the public, uh, not only to the specialized audiences that we are sort of used to communicating with, but also to the more general public, because this general public is the one that is sort of in the middle of these debates, and that needs to understand what we do, why we do it, how we do it. These, I think, should allow us to continue to to maintain or to increase our credibility, and to assure that we continue to have the rules that we have now, but also to increase the effectiveness of monetary policy. So in a recent paper that I have with some colleagues here at the Central Bank, we try to understand which measure of credibility has the most impact in effectiveness of monetary policy. And we find that the one that has the most impact is actually transparency and accountability. And this is something that I think is a good news, because it is something that lies within our control. So central banks, yes, perhaps we cannot change the constitutional rules, not that we want to, but it is hard to change. But transparency, we can do efforts to improve our transparency and the way we communicate, yeah, to assure that our decision-making process is clear to different audiences. Uh, Also to acknowledge what is it that we don't know. No, in these times of uncertainty, there are more and more things that we don't know. Alexander mentioned the unknown unknowns or something like that. So we also need to convey the idea of how we are working uh, in circumstances of high uncertainty, how we manage the risks, what are the risks, and what are the risk analysis that we do. I would say that uh, it is important that we view credibility as something that we build day after day. Yes, we might have a record of 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 success, of good performance, of reaching our inflation target, but credibility changes every day, and we see it, on the changes in inflation expectations. So it is something that we have to continue working on, and where transparency, which is something that we control, can help us substantially improve our credibility and the effectiveness of our monetary policy, and again, to protect those rules that we know are necessary to safeguard our independence. Thank you.
Thank you very much, Bibiana. You mentioned several very important points. I think one that credibility needs to be earned. It needs to be nurtured. But there are important steps for that. Commitment to the institutional settings and tools that are known to work well in this area, and working towards enhancing accountability through transparency, communication. Indeed, at a time where political economy challenges are numerous, making sure that the population at large understands what monetary policy means, how it's conducted, and who does it. It's an important part of the credibility equation, I would say. Claudio, could I turn to you? Claudio Soto, board member of the Central Bank of Chile, again, a long career in senior policy making in this area in Chile. With central banks, Claudio, increasingly expected to address multiple issues, financial stability, climate risk being one that is high on many analysts' agenda. How can the central banks expand their mandates? Should they expand their mandates without jeopardizing their autonomy and credibility? What safeguards are essential so that they can continue to do their job well, given these multiple demands?
Well, thank you, Luis. Thank you, the OECD, for inviting me to this panel. Those are very interesting topics, and I think they're challenging nowadays, given the environment we're living. Let me share with you a presentation that I have to highlight some of the points that I would like to make. Do you have it on your screen? Yep.
We can see it. Yes, please go ahead, Claudio.
Okay, perfect. So let me talk broadly speaking about autonomy and the mandate of the central bank, and then we can jump upon some more specific the question that you asked me. So let me first by highlighting the context where we are setting the autonomy of the central bank. The pillars of Chile's macroeconomic performance, and I would say relatively good performance in terms of inflation and stabilization policies, rest on those four pillars that you see there. One of them is the autonomy of the central bank, where we have been following an inflation targeting regime since more than 20 years by now, with a fully flexible exchange rate. I think those are very important elements. But not only that, also a responsible and predictable fiscal policy has been mentioned. Alexander mentioned fiscal policy. And here in Chile, we have a fiscal rule that has been in place also for more than 20 years. And I think this is also part of the pillars of the macroeconomic performance of the country. Then we have the regulation. We have a very strong regulation system for the financial system. And finally, I would say, more broadly speaking, we have very competitive market in general, a very open economy in terms of goods flows and also financial flows. We have a free capital account, free capital movement, an open capital account, and also a free trade agreement with several countries. So in general, an environment of competitive market with strong regulation and strong fiscal policy guided by the fiscal rule and the autonomy of the central bank. Now, the central bank is autonomous since 1989. There was a new constitutional law at the time that granted the autonomy. It defined the central bank as an autonomous body, and it also explicitly says that it is of a technical nature. Okay, but autonomy, as it was discussed, is not a matter of what is written in the law. It depends on details, and one of the important details I would say are, first of all, the objective, and secondly, the institutional setups that are important. So in terms of the objective, the central bank in Chile has two main objectives. One is currency stability, which is price stability. And secondly, we have as a mandate the normal functioning of the financial system. Okay, so this means that we have to, provide regulations and move the tools that we have available in order to guarantee the normal functioning of payments, which is that we don't have a financial crisis, basically speaking. Okay, so those are the two mandates that we have. And we have instruments for each one of those two mandates. In the case of monetary policy, well, we have the monetary policy rate as the main instrument. Then we have some liquidity facilities in order to guarantee that the monetary policy rate is transmitted into the market. The decisions for monetary policy are taken 8 times a year in a pre-announced monetary policy meeting. The calendar for the monetary policy meeting is published a year in advance. This has not always been like this. This is an innovation that happened 20 years ago, more or less. But the fact that it is pre-announced means that the market knows exactly when we could move the rate if we do it. This is not a news for the market. In the 90s, for example, there was no public calendar for policy decision, and the market was taken by surprise when the central bank had moved the rate at the time. Nowadays, the calendar is publicly available. Everybody knows. And as I mentioned here, we have 8 meetings a year. And then in terms of financial stability, we have a bunch of instruments. Well, we have liquidity facilities. We have the counter-cyclical capital buffer, which is a new tool that we have since 5 years ago with a new banking law that created this new buffer and put it in under our mandate to adjust it. And then we have the financial regulation. So there are many pieces of the regulation that where the central bank has the mandate to define. There are other set of regulations that are in the hand of the CMF, the Commission for the Financial Market, but the regulations that are based on payments, basically, and liquidity are under our own mandate. Decision on the CCYB are taken twice a year. Actually, yesterday we had our financial policy meeting. So we have 2 financial policy meetings a year that are pre-announced. Yesterday we had the second one this year. And in those meetings, we announced an eventual movement in the CCYB that, as I mentioned, is one of the tools that we have for financial stability. Now, some details about this institutional setup, I think, are key in order to support the independence of the central bank and the autonomy. The governing council is composed by 5 members. Each one of us is nominated by the President of the Republic, but has to be approved by the Senate. So it's a 2-step decision on the nomination. And each one of us, so each member is appointed for 10 years, and every 2 years there is a new member to be appointed, which means that each president cannot nominate more than 2 members of the board. So the government here in Chile lasts for 4 years, and since every 2 years there is a nomination, no government can nominate more than 2 out of the 5 members. So no government can have during its period the majority of the board. The removal of board members is under very special circumstances, is done by the Senate upon a request by the President of the Republic, under very specific conditions that we fulfill. So it's not, so there is a protection for the position itself. The President of the bank, the central bank, is nominated by the President of the Republic out of the 5 members that are in the board. And the President of the bank serves a 5-period term, which is longer than the presidential period. So again, there is a certain overlap. So those are the institutional setup, which I think are key in order to preserve the independence of the central bank, which are very important for the credibility of policy. So in terms of consultation and accountability, that also was mentioned, and I think this is also very key for the autonomy. The autonomy has to be preserved. We always say that autonomy has to be preserved. And I think here accountability plays a very key role. First of all, in terms of consultation, we have a coordination with the government. The Ministry of Finance attends our monetary policy meeting, but the Ministry of Finance does not have a right to vote, has the right to speak at the meeting, but has no right to vote. Then by law, we have to give an account of our policies and management to the Senate once a year. But on top of that, we have 4 monetary policy reports published 4 times a year. We have 2 financial stability reports. One of them was published actually today. And then in the monetary policy statement, 8 times a year, we provide a guidance on our monetary policy. We have the audit and compliance committee, and then we have all the spread out of information that we provide as board members with our speeches and participation in conference and seminars. So we spend a lot of resources and effort in terms of communication, which I think is key for the accountability and in order to preserve the autonomy. Okay. I think those are the main elements, I would say, in terms of the autonomy and the credibility of the central bank. Now, in terms of more mandates, we have already two mandates. And one of the key elements here is to have the tools in order to address those mandates. So I think the central bank can absorb mandates as long as it has the tools that are necessary to fulfill those mandates. That's the basic condition, I think, for expanding the set of mandates. The other one is the coherence of mandates with each other, right? So in the case that we eventually would have a different mandate and gets into contradiction with one of the existing mandate, then that would be a problem. Now, we know by experience that sometimes, given the financial cycle and the business cycle itself, that the mandate in terms of price stability might enter into contradiction with the mandate in terms of financial stability. Many countries suffered that in the 2000s, before the global financial crisis. And here, I think the key element, again, is communication to explain very well the rationality behind the decisions and the fundamentals and the drivers of one of the cycles that we are observing. Some of you mentioned supply shocks and the trade-off that central bank confronted under supply shocks. Well, I think it's key the communication and being able to explain well to the public what is going on in the economy. We suffered such a shock like last year. There was a very steep increase in the price of electricity. The price of electricity in Chile was frozen during the pandemic, and then prices had to normalize, and that occurred in a very short period of time last year, which is a very clear example of a supply shock. There was a jump in inflation, but it was pretty clear that it was a supply shock that was temporary in time, that would not affect the convergence of inflation within the horizon, the policy horizon. So we made a lot of effort here communicating the nature of the shock and why it wouldn't affect the convergence of inflation. I think that's a very good example of how to confront this sort of supply shock without having to act with monetary policy, given the fact that we have credibility. The monetary, the anchor, the 3% target didn't move in response to this shock. And part of this is the credibility, and I think the good explanation that we provided the market for the reason of the hike in inflation. That's it, what I have to say, and I'm open to more questions and discussion.
Thank you very much, Claudio. Very interesting to see the actual institutional underpinnings of your monetary policy regime. It's always interesting to see the details of how things work in practice, to see where we are and the safeguards that exist. But also the point that you made about the different mandates. Mandates come with different objectives, and multiple objectives may end up involving trade-offs and unintended consequences of actions on different fronts. So it's very important to have that very clear when you communicate and act to achieve those stated objectives. We have some time left. Before getting back to Alexandre, I wanted to have a second round with the three of you, Gabriel, Bibiana, Claudia, on your final intervention, so to speak. We've heard a lot. You all shared very insightful comments on based on your experience. So at the end of the day, how can central banks preserve independence given all these evolving mandates, expectations, constraints? What's your takeaway in, let's say, 2 to 3 minutes? If you don't mind, Bibiana, starting with you.
Sure. Thank you, Luis. I would insist on the importance of having a strategic and rigorously planned communications agenda. Yes, I think central banks were very good at doing all of our job, but then I don't know how much of thought and of planning we put into the communications. And we think that we have to get better at that. And here I would insist not only on the need, because probably there's space to improve our communications with specialized audiences, market analysts, market participants. I think that probably there's space to improve our communications there, but that probably is not going to be enough. Yeah, given, as I said, all the reputational risk that we face in light of all the public debate, and given how persistent inflation expectations have sort of, I don't want to say de anchor is a very strong word, but they have been very persistently above our goals, above our targets. Taking into account those two situations, I think that we have to do more than just communicating to market participants or market analysts. We have to make an effort to communicate to the public in general, who is the ones that are in the middle of this public debate without knowing what to think, and who are also those that can help us protect and safeguard central bank independence in the legal norms. And then looking at the Colombian experience, I think that we can also do a better job in communicating with the corporate sector, or I mean with the firms. In Colombia, when you look at expectations, you see that persistently, or yeah, as long as I think we have data, expectations from the firms are higher. Inflation expectations from the firms are higher than that from analysts. And that, of course, is unfortunate because it is the firms that set the prices, but it also shows an opportunity to improve our communications with them. And, uh, and I think that the fact that inflation expectations by analysts or by market participants are lower also demonstrate that it is possible to anchor or re-anchor those inflation expectations. So yeah, with that I close, just saying that yeah, we can not put enough, we cannot risk not putting enough attention to the communication agenda, which should be strategically and rigorously thought through. Thank you very much.
Thanks, Bibiana. Claudio.
Yeah, well, I agree that communication is a key element for preserving independence, and this is important not only to preserve independence, but I think also to make the monetary policy itself more efficient. As I mentioned, the example, as I gave the example of the electricity price shock last year, part of the efficiency of the policy response was given by the fact that we could communicate in a well manner the nature of the shock and the consequences of the shock, and the fact that it would not affect our objective in the medium term. But not only communication. Here I would like to make another point, which is technical excellence. I think we are a technical institution, and we have to preserve the technical quality of the analysis done at the central bank. We also devote a lot of resources in terms of the technical excellence, which means to have the very good staff, very well prepared staff, top of art, the technical devices to to evaluate the state of the economy, to do forecasting. I think part of the society evaluates the central bank in terms of the accuracy of their predictions, for example, and for that it's very important to have a technical excellence. So I think this is also a very important element particularly when you have some controversial issues to have to address, to have a very well done job, technically speaking. I think is key in order to preserve the autonomy. And so I think communication, also technical excellence, is something that we have to preserve.
Thank you very much, Claudio. We get communication 2-0 for now. Gabriel, your turn.
Yeah, well, thank you. Well, I think that in order to maintain and reinforce the autonomy and credibility of central banks, well, I think we need to continue to deliver positive results. In my presentation, I argue that there has been benefits related to the price stability environment. In this setting, I think that in Mexico, there is support for central bank autonomy. Authorities, journalists, scholars agree on the importance of central bank autonomy. So in order to maintain this, we have to have a monetary policy focus on the price stability mandate. Now, I would like to talk about the mandate because in my presentation, I also argued that in the case of Mexico, there has been weak economic activity in the last 2 or 3 decades. And in this setting, some people have argued that it may be convenient to have a dual mandate in the case of Mexico. So in the case of my country, the Mexican society, through the Congress, made the decision about the central bank mandate. So the central bank doesn't choose the mandate, but we have an opinion about this. And I will argue that at the central bank, we consider that the price stability mandate is the appropriate, is the right one. But I think that we should do 2 things. The first one is that I think that the central bank should make clear what are the scope and limits of monetary policy, what can be achieved with monetary policy, and what cannot be achieved with monetary policy. I think this is very relevant. For instance, we cannot achieve a permanent increase in economic activity with systematic monetary policies. So we have to make clear what are the limits and scope of monetary policy, and this imply a communication challenge. In addition, I think that we have to do something else, at least in the case of Mexico. I think that the central bank should participate more actively in the debate about the factors behind the performance of the Mexican economy in the last 2 or 3 decades. In addition, we have to participate in the proposals for public policies for increasing productivity and potential output. And at the central bank, we have the human capital to do that. And we need to do more research, more economic research on this topic. So I think that we have to do 2 things. We have to make clear what are the limits and scope of monetary policy. And in addition, we have to participate more actively in the debate about the solution for the economic problem in Mexico.
Thank you very much, Gabriel. Alexandre, turning to you now, the very hard task of Claudio, you have your hand up?
Yeah, can I repeat a bit? Because I have a slightly different perspective in terms of the involvement of the central bank in public policy discussion. I think in order to preserve autonomy, we have to be very careful in terms of some public policy discussion that are more incumbent to the political space rather than the space of the monetary autonomy. I think we need to be very rigorous in terms of giving our opinion based on a technical approach on the matters that are relevant for a central bank or where the mandates put us under responsibility. But we have to be very careful in terms of giving opinions on realms that are beyond the mandate of the central bank. These are a different balance because many times some discussion on terms of public policies could eventually affect inflation in different dimensions. So we could eventually have an opinion, but we have to be very careful in what is the boundary, because if we cross that boundary, then we might jeopardize the autonomy. I think this is something which is important that I didn't mention in my presentation.
Thanks, Claudio. Point well taken. Alexandre, how would you connect the dots in the very rich set of interventions and exchanges that we've heard about in the light of your initial intervention?
Well, thanks a lot. I think this has been a formidable debate, and I will refer to the comments made by the panelists. I think all very rich, and I think they help to understand the challenges that central banks face this time around. I will start with Gabriel Quadra. I think when in his intervention, he highlighted the issue that central bank independence should not be taken in isolation, a point they made. Uh, so it's a necessary condition, but perhaps not a sufficient one, and it has to do with the main challenges that central banks face, which are outside the purview of their mandates, which is I mentioned two. People here emphasize, because maybe because I am Brazilian, I also put high debt levels into the picture, but they emphasize the low productivity growth. And there is a debate here, and I see Claudio has a different perspective. I'm not sure which one to take, but certainly, even if central banks are not involved in discussing the necessary policies to raise productivity in their economies, this is an issue that affects central banks in their pursuit of low and stable inflation. So, as I have said in my initial remarks, I think the competent authorities should be taking care of this low productivity growth that we see in many of the Latin American economies. Uh, so this is an issue, and hopefully they will focus on this. The supply side of the economy does not pertain to central banks. As we know, central banks manage demand side of the economy, but structural reforms and reforms that increase the potential of the economy pertains to other areas of the government. Whether the central bank is involved in the debate or not is a debatable question, as we have seen here today. The second issue is communication. I think communication is very important. Bibiana sort of highlighted this issue quite strongly in her intervention. And I just wanted to share with you that the BIS Americas office has recently conducted a survey among central banks in the region and some other central banks like Turkey and South Africa. And the question of communication is a very important issue in the monetary policy management, I should say. So they highlighted that effectively communicating nuances of monetary policy to diverse audiences, going beyond the experts, it remains a significant challenge. So I think I agree absolutely with Bibiana that more needs to be done in this domain. I mean, to reach out to the non-experts in monetary policy, and I think Gabriel also alluded to that in the sense that we need to communicate to what's the importance of having a central bank independence that seeks for low and stable inflation for the benefit of the society. So Claudio also mentioned the issue of coordinating with other agencies. I mean, he highlighted the fact that the Ministry of Finance is part of the monetary policy decision-making board, doesn't have a vote, but has a say in these meetings. I think this is quite important. So to conclude, I should say that independent of what's happening in the external environment, central banks need to keep committed to their core mission, which is low and stable inflation. Second, to strive to effectively communicate not only with market experts, but with firms and society in general. And at the end, going to part of what I said, two things which are old vows in our region. like low productivity growth and high public debt, I think the responsible or the pertinent authorities need to strive to make sure that the central banks have the ability to focus squarely on their mission to keep inflation low and stable. So I think with this, I'm sure that those are important messages for central banks in our region.
Thank you very much, Alexandre. Very pertinent points on what has been a very rich exchange. I would like to thank you for setting the scene for the conversation that we had today. Let me also thank Bibiana, Gabriel, Claudio for sharing your experience, sharing the vantage points of your institutions and your own thoughts on these topical issues. I'm sure we'll come back to this. We have by no means exhausted the topic, and the list of challenges we're all facing is unfortunately not getting shorter. So there will be opportunities to revisit some of these issues in the future. Thank you very much for making the time to be with us. Thanks to all of you who've watched, and we very much look forward to seeing you all on the next edition of the seminar series. Thanks for joining us today, for sharing your thoughts. See you next time. Bye.
Bye-bye.
Thank you. Bye.
Bye. Thanks. Thank you.
Thank you.